The news that many Australian pensioners have been waiting for has finally arrived, and it is both reassuring and empowering. The $1880 Centrelink pension payment has been officially confirmed, and the exact dates for when this money will hit the accounts of eligible recipients have been revealed. This confirmation is part of the regular adjustment cycle that the government undertakes to ensure that the age pension and related benefits keep up with the cost of living, inflation, and broader economic pressures facing senior Australians. For millions of retirees and part pensioners who rely heavily on these payments to cover everyday expenses such as rent, groceries, energy bills, and healthcare, this update is not just a technical adjustment, it is a vital source of financial stability. In this comprehensive video script, we will explore every detail of what this $1880 payment means, who qualifies, the exact timing of when the funds will be released, what additional benefits may accompany it, and how seniors can make the most of these entitlements. To begin with, it is important to understand why the figure of $1880 has become so significant in the pension landscape. The Australian government periodically reassesses the base rate of the age pension in line with inflation data, average wage growth, and legislative commitments to ensure that seniors are not left behind as the economy shifts. The confirmed $1880 amount represents the combined fortnightly payment for a couple receiving the maximum rate under Centrelink rules, though individuals on the maximum single rate will also see meaningful adjustments. While the actual amounts can vary slightly depending on eligibility, living arrangements, and whether or not certain supplements are included, this figure serves as a headline benchmark that has reassured retirees that their benefits remain protected. Equally important are the dates, because for pensioners living on tight budgets, knowing exactly when their money will be deposited can make the difference between meeting obligations on time or falling into financial stress. According to the official payment schedule released by Centrelink, pensioners can expect to receive the updated $1880 payment in the first fortnightly cycle of October, with the first deposits beginning from Tuesday, October 1st, and rolling out progressively depending on the banking institutions and the specific eligibility categories. For those who have been tracking their income closely, this aligns with the government's existing promise that no eligible person will be left waiting unnecessarily. Payments are usually released in 2-week cycles, meaning that the following installments will occur on October 15th, October 29th, and so forth. Pensioners are strongly advised to double-check their MyGov and Centrelink online accounts to confirm their individual payment dates, since variations can occur based on weekends, public holidays, and processing times. Beyond the timing, pensioners should also be aware of the conditions tied to eligibility for this confirmed payment. To receive the full $1,880, recipients need to meet age and residency requirements, which means being of qualifying age, currently set at 67 years for both men and women, and having lived in Australia as a resident for at least 10 years, with at least 5 of those years being continuous. Furthermore, income and assets tests continue to play a crucial role in determining the rate of pension received. For instance, retirees with modest superannuation balances and limited external income will generally qualify for the maximum rate, while those with larger assets or part-time earnings may receive a reduced pension. Nonetheless, the confirmation of the $1880 figure demonstrates that even those on part pensions will benefit from the adjustments, with indexed increases ensuring fairness across the board. It is also worth noting that the $1880 Centrelink pension payment does not exist in isolation. It is typically supplemented by additional allowances such as the pension supplement, energy supplement, and in some cases, rent assistance. These supplementary payments can add several $100s per fortnight to the pension, depending on individual circumstances, meaning that many retirees will receive more than the headline figure once all entitlements are included. For renters, this can make a particularly big difference, as rental markets across Australia remain under intense pressure, with costs rising significantly in metropolitan and regional areas alike. Therefore, it is critical for pensioners to ensure that they have updated their living arrangement details with Centrelink so that they are not missing out on any supplementary support. The announcement of the confirmed $1880 payment also arrives against the backdrop of significant debate about the adequacy of pensions in Australia. Advocacy groups have long argued that while indexation helps, the base rates still leave many seniors struggling, especially those without home ownership who must pay rent in addition to covering healthcare and daily expenses. The government, in response, has stressed that the pension remains one of the most important safety nets in the social security system, and that increases like this demonstrate its ongoing commitment to retirees. It is likely that further reviews and potential reforms will follow, particularly as the cost of living continues to place pressure on households across the country. In the meantime, however, the confirmed $1880 payment provides immediate relief and certainty for pensioners. For those watching this video, it is important not only to understand the numbers and dates, but also to take proactive steps to ensure that the payments flow smoothly. Pensioners should log into their MyGov accounts linked to Centrelink to verify their bank details, check for any outstanding reporting requirements, and review their eligibility status. Missing or outdated information can cause delays, and in some cases, payments may even be paused if Centrelink does not have the correct details. Those who are unsure can call Centrelink directly or visit a Services Australia office for clarification. By preparing ahead of the payment dates, retirees can avoid unnecessary stress and focus instead on the benefits these funds provide. Beyond the standard pensioner concession card, there are also other concession cards linked to eligibility for age pension recipients, each offering its own set of benefits. For example, those who may not qualify for the full age pension but still receive some form of support can be issued the Commonwealth Seniors Health Card, which opens access to cheaper prescription medications under the PBS and, in some states, additional healthcare and utility discounts. Another key card is the Healthcare Card, which similarly provides reduced costs on medical services and energy bills. Collectively, these concessions significantly increase the real value of the $1880 pension payment, since they reduce out-of-pocket expenses that might otherwise consume a large portion of retirement income. It is not uncommon for seniors to underestimate the importance of these cards, yet in reality, they represent one of the most practical forms of assistance that the government provides beyond the regular cash payments. Transport concessions are another area where pensioners can save considerably, especially for those who need to travel frequently for medical appointments, social visits, or community activities. Depending on the state or territory, pensioners may qualify for heavily discounted or even free public transport services, and in some cases, regional seniors travel vouchers are offered annually. These travel-related benefits not only save money, but also help to reduce social isolation, allowing retirees to stay mobile, engaged, and connected to their communities. This aspect of the pension system is vital for maintaining quality of life, because social participation is just as important as financial security in older age. Utility concessions are equally critical, as energy and water bills continue to rise across the country. In most states, holders of concession cards can apply for discounts on electricity, gas, and water accounts, often saving hundreds of dollars per year. Some jurisdictions also provide emergency rebates or seasonal allowances to help pensioners manage peak energy costs during extreme weather conditions. Considering how much of a household budget is devoted to utilities, these concessions make a meaningful difference, ensuring that pensioners can keep their homes comfortable without having to sacrifice other essentials. When combined with the confirmed $1880 payment, these programs highlight how financial and non-financial supports work together to sustain retirees. Pharmaceutical concessions deserve special attention because healthcare costs are often the largest ongoing expense for pensioners. With a pensioner concession card or Commonwealth Seniors Health Card, retirees can access prescription medicines at significantly reduced copayment rates under the PBS. This ensures that seniors are not forced to choose between medication and other necessities, a choice that no older Australian should ever face. Furthermore, Once an individual or family reaches the PBS safety net threshold within a calendar year, the cost of medicines drops even further, in some cases to no cost at all for the remainder of the year. This policy is particularly important for seniors managing chronic conditions, as it prevents the cumulative cost of multiple prescriptions from becoming overwhelming. Housing-related concessions also come into play, particularly for those pensioners who rent. The Rent Assistance Program, available through Centrelink, provides additional fortnightly payments to eligible pensioners to help offset rental costs. This assistance is layered on top of the base $1880 payment, and while the exact amount depends on the rent paid and household circumstances, it can provide much-needed relief in an environment where rental prices have increased sharply in recent years. Pensioners who qualify are strongly encouraged to apply, as this benefit is not automatically applied in all cases. Recipients must declare their rental situation to Centrelink in order to have it assessed. Given the current housing market, ensuring that rent assistance is fully utilized can mean the difference between financial strain and relative stability for older renters. It is also worth mentioning the various state-based rebates and concessions available to pensioners, which operate alongside federal supports. For example, in many states, pensioners receive reductions in vehicle registration fees, discounted driver's license renewals, and lower council rates. These concessions are often overlooked, but can save hundreds of dollars annually, particularly for those who own property or maintain a vehicle. To maximize their entitlements, pensioners should check with their state or territory government websites, as eligibility and application processes can vary. By combining these state-level concessions with the federal $1880 pension payment and associated supplements, retirees can create a stronger financial safety net for themselves. Digitalization of concession cards and services is another area of ongoing change. Increasingly, the government is offering digital versions of concession cards that can be stored in apps such as the Express Plus Centrelink app or in digital wallets on smartphones. While physical cards remain available, the shift to digital platforms provides added convenience and security for those who are comfortable with technology. However, it also raises challenges for seniors who may not be as digitally literate. For this reason, it is important for family members, carers, and community organizations to provide support in helping pensioners navigate these new systems, ensuring that no one misses out on benefits simply due to technological barriers. Taken together, all of these concessions illustrate that the confirmed $1880 Centrelink pension payment is only one part of a much broader ecosystem of support. While the base payment is critical, it is the combination of concessions, supplements, and allowances that truly make the system effective in addressing the diverse needs of pensioners. Seniors are therefore strongly encouraged to review all aspects of their entitlements, not just the cash payments, and to stay informed about changes or new initiatives introduced at both federal and state levels. By doing so, they can maximize the value of their pension and achieve greater financial security in their retirement years. In addition to concessions, another important element to understand is how these pension payments interact with taxation. For most pensioners, the age pension is tax-free, meaning that the $1880 payment received is not subject to income tax deductions. This is a major advantage, as it ensures that retirees receive the full benefit of their entitlements without losing part of it to taxation. For those who may still be working part-time or receiving income from investments, it is important to understand how the pension interacts with the broader tax system. In many cases, pensioners can still take advantage of the seniors and pensioners tax offset, which further reduces or eliminates any tax liability, ensuring that older Australians keep more of what they earn or receive. Understanding these rules is essential for effective financial planning, and pensioners who are unsure should seek guidance from financial advisors or Centrelink's Financial Information Service.